All right, welcome to The Explainer. Today, we're diving deep into Apple's latest earnings report. We're going to peel back the layers, look past those big headline numbers, and really figure out what's going on inside one of the biggest, most valuable companies on the planet.
Okay, let's start with the big one. This is the number that's been making all the headlines. $27.46 billion. I mean, just let that sink in. That's pure profit, net income for just 3 months of work. It is an absolutely mind-boggling amount of money.
But here's where it gets really crazy. To put that number into perspective, look at this. We're talking about a nearly 86% jump from the exact same time last year. So that's the real question, right? How on earth does a company as massive as Apple practically double its profit in just 1 year? It seems almost impossible.
Okay, so here's how we're going to break this down. We'll start with those headline numbers, then figure out where Apple's sales are coming from. After that, we'll look at the profit engine itself, dig into a really important tax footnote. Trust me, it's a big deal. And then we'll wrap up with the big takeaway.
All right, first up, the headline numbers. Let's get that 30,000-foot view of how the company did this quarter.
So taking a quick look, everything seems pretty great, right? Total sales are up from about $95 billion to over $102 billion. Their gross margin, which is basically the cash they have left after paying to make their stuff, that's up too. But look at that bottom line. That net income number, that massive jump is the real story here, and it's what we've got to figure out.
So, to get to the bottom of that profit, we've got to start at the top. Let's decode their sales. Where is all this money actually coming from?
So you can basically think of Apple's money coming from 2 big buckets. You've got products, that's the hardware, the iPhones, the Macs, the stuff you can actually touch. That makes up the lion's share, about 72%. Then you've got services, think App Store, Apple Music, iCloud. And that slice of the pie is getting bigger and bigger, now at a really hefty 28%.
And this is where it gets super interesting. I mean, look at the sheer scale of that services business. Yeah, the iPhone is still the undisputed king, no surprise there, raking in $49 billion. But check out Surfaces. At almost $29 billion, it's now bigger than Mac, iPad, and wearables combined. It's not just a side hustle anymore, it's a full-blown second engine for the entire company.
So, where in the world is all this happening? Well, the Americas and Japan saw some nice, steady growth. But wow, look at Europe, a huge jump of almost $4 billion. The only place that seemed a little soft this time around was Greater China, which actually dipped a little bit compared to last year.
All right, so we know where the sales came from. Now let's follow the money trail and see how that turns into actual profit.
It's actually a pretty straightforward path. You start with that big sales number, right? Over $102 billion. Then you take out what it costs to make all those iPhones and Macs. The parts, factory costs, all that. What's left is your gross margin. But you're not done. Then you have to pay for everything else. All the research, the marketing, the people at Apple Park, and once you subtract that, you get your operating income.
And just to give you a sense of what those operating expenses look like, get this. Apple spent more than $8.8 billion in just 3 months on R&D alone. That's the money they're pouring into creating the next iPhone, the M-series chips, and, probably some top-secret projects we can only dream about. That's some serious investment in the future.
Okay, you ready for the twist? Because here's where the real story is. That massive 86% profit jump we've been talking about, the secret isn't really about selling more iPhones. Nope. It's hidden away in the boring part of the report, the part about taxes.
And here it is, plain as day. This year, Apple's provision for taxes was about $5.3 billion. But look at last year. It was a whopping $14.8 billion. That's a nearly $10 billion difference. And that, right there, is the single biggest reason why the net profit number looks so dramatically different year over year.
So what gives? Why was last year's tax bill so incredibly unusually high? Something weird was definitely going on in 2024, because that is not a normal number.
To get this, we need to talk about a little piece of financial jargon called non-GAAP. It sounds complicated, but it's not. All it really means is taking the official numbers and tweaking them to ignore any weird, one-time stuff that happened. It just helps you see how the actual day-to-day business is doing without any strange distractions.
And boom, here's the smoking gun pulled right out of Apple's own report. Last year, they had a huge one-time tax charge of $10.2 billion. This had to do with a big legal thing with the European Commission, and it had absolutely nothing to do with their normal business of selling phones and laptops. It was a one-off hit.
So let's do the math. What happens when we use that non-GAAP idea and just pretend that weird tax thing never happened? Well, the official profit last year was $14.7 billion. But if you add back that $10 billion tax hit, you see the real underlying profit was actually closer to $25 billion. So going from $25 billion last year to $27.5 billion this year, hey, that's still fantastic growth, but it's not that insane off-the-charts 86% jump that grabbed all the headlines. See how that works?
Okay, so we've looked at the sales, we've dug into the profits, and we've uncovered that tax mystery. So what's the big takeaway? What does this all really mean?
Here's the bottom line. Apple's business is rock solid. The iPhone is still the beast that drives everything. The services division is an absolute powerhouse, and it's growing like a weed. But that massive profit jump everyone was talking about, it was kind of an illusion. It was mostly just an echo of a weird one-time tax situation from last year. The core business is healthy, but the comparison was flawed from the start.
And if you want to see where Apple is heading, this right here tells the whole story. Yeah, the iPhone grew a respectable 6%. That's great. But look at services, growing at more than double that speed, over 15%. This right here is the future growth engine for the entire company. No question about it.
So that leaves us with one last big question to think about. As this incredibly profitable services business just keeps growing faster than everything else, is Apple itself changing? Are we watching them slowly morph from a company that sells you a cool phone into a subscription company that just happens to use that cool phone to hook you into their ecosystem? That, I think, is the real story we should all be watching over the next 5 years.